Now, in today's video, we're going to be doing something a little bit different. I'm going to be giving you 2 examples. And then the third one, you're going to pause the video and then you test yourself, okay? Pause the video, analyze it, analyze the third pair that I'm going to be talking about. First pause, then you do it on your own and see if you've understood the concept of the video. Now, what's the concept of the video? The concept of the video is that I want us to improve on our top-down analysis. Most of us are struggling with it. We're still failing to understand how to put the things together. Now, what things are we failing to put together? One is we don't know how to determine direction. Then 2, we do not know how to use the structure that we are seeing in front of our eyes on the screen. Then thirdly, also we're struggling with entry. So we're going to be doing 2 examples, but of course we're going to be dealing with current data, the current analysis, of course. Then the last one, you're going to analyze it yourself and then practice it during the week and let me know the results in the comment section or even on our social media handles. You can send us or even an email. Our details are in the description, okay? Now, the first one I'm going to be dealing with is gold, okay? Now, when you look at gold, but let's first take back briefly and we see what we're supposed to put to perspective. One is what we call direction, okay? We need to identify direction. Are we going up or are we going down, okay? Now, these are things that are supposed to be fast. The first thing you're supposed to do when you open your chart is this, to identify the direction. Am I going up or down? Just the same way you wake up in the morning and then you plan for your day. This is the first thing you're supposed to do. After that, get the structure that is going to give you the motive. After finding the direction, if you're going up or down, then the structure, you have to have a structure time frame, okay? The second one is the structure. After direction, you have to find structure, okay? The structure gives you it solidifies this motive, okay? If we're going up, does the structure support going up? Or if we're going down, does the structure support going down? Ask yourself that, okay? All these things come down to forming a set of rules. Your set of rules enable you to journal your trades. These things are sequencing, okay? If you remove one, it's going to be very hard for you to come up to get to consistency. So make sure you follow them, okay? So after structure is when you get to entry, okay? Now entry is following still, you can see it comes from direction. If we're going up, the structure must be showing going up. If we're going down, the structure must be showing going down. And then also, this leads us to entry. If the structure is showing us that we're supposed to be buying, why should you sell? If the structure is showing us we're supposed to be going up, why should you sell? Now, also this leads us to like 2 types of trading, okay? We have 2 types of traders. The structure may show that we're supposed to be going up, okay? But we are still somewhere here. We have not touched here. Let's say we're supposed to be going up from here. Now, most people want to reach a moment and take a sell to reach this moment, which is not, I don't recommend that. If the structure and direction say that we're supposed to be going up, wait for it to get to that point. You're supposed to be going up, okay? So when it gets to this level here, of course, we know the rules of a W. For example, if you don't know the rules of the W's and M's, because I've written it here, I'm saying that because I've drawn a W. You can just search for the video of W's and M's. All the rules are there, okay? But just briefly, when there's a W, we expect a pullback to the neckline, okay? So meaning the direction is down, then up. So if you see this W in monthly, meaning that your direction is downwards. So if you go down to weekly, you must be looking for a structure that is pushing us downwards, or the structure should be aligning with what pushes us downwards, okay? But if we are down here, okay, the direction is what? The direction is upwards, okay? Now, meaning that you have to, when the market is down here, of course, we're already down here, meaning our direction is upwards. So if you go to weekly, your structure in weekly should be showing you that we are going upwards. If it's not showing it going upwards, wait for it to align, okay? Now, it's not a must talking about this time frame. It's not a must that you should use the time frame I'm using, monthly, weekly, and daily. No, this is our direction time frame. This is our structure time frame 1, structure time frame 2. Okay, you can create your own. Okay, you can use daily H4, H1. You can use H4, H1, minute 30. It depends on you as a person. What type of trading do you do? Okay, most of you want to just cram this. I use monthly, weekly, and daily, and my entry as H4 because I do swing trading. Once in a while, I do intraday, okay? But if you're a scalper, you can start from H4 as your direction, H1 and minute 30 as your structure time frames. Even if you want to go up to minute 1, you can start from H1, minute 30, minute 15, like that. But make sure you always do top-down analysis so that you can see the bigger picture compared to the entry time frame. Don't just start doing analysis from from minute 1. It will always not end up well, okay? So I've just showed you briefly what we're going to be dealing with. Make sure you align your time frames, get your time frames in two places, and then we follow direction after direction, structure after structure, and then that's when we can get to the entry point. Okay. Now we're going to be starting with gold. The first example I'm going to be using is gold. Remember, we have said watch two examples. We're starting with gold. Then we're going to look at Euro USD. The third one I'm just going to pick randomly, and then you pause after Euro USD. You pause. Then the third one, you are going to be doing USDJPY, I think. And then you pause, you go and analyze USDJPY on your own and watch my video and see if you really understood, if we did the same things. Okay, then you mark yourself. Now, starting with gold here, let's go to the monthly time frame. Once again, I repeat, it's not a must that you should use monthly as direction. You can use any set of time frames that you're comfortable with. Okay, I use monthly, weekly, and daily because I'm a swinger. Okay. So starting from monthly, we can clearly observe that we have a red candle here, okay? Meaning that we have an impulse here in monthly. So whenever there's an impulse, we have learned about a Fibonacci retracement tool. These are all-time high candles. So whenever the market is breaking more than two highs, the market broke this high, okay? So whenever the market is breaking more than two highs without making a proper retest, what we bring into application, we call the Fib rule. Okay, so if you don't understand the Fibonacci retracement rule, watch the video on Fib. Okay, so we have an impulse. What do we expect? A correction. Okay, so that's the direction we see in monthly. Now, the direction we're seeing in monthly is that we're supposed to be pushing lower. Okay, we're supposed to be going lower. Okay, and you can already see the market is already pushing downwards. Okay, now what's the complete motive of this impulse? It is impulse, correction, and then we continue upwards. So depending on the type of trader you are, like I've already mentioned, some of you want to trade pullbacks, some of you want to trade continuations. So you have to position yourself depending on the type of trader you are. Do you trade pullbacks, which is already happening, or do you trade continuations? Depends on the type of trader you are. Now, for us, let's first get the structures. Okay, we put the structures in place, then you as the type of trader you determine. We're going to be looking at both of them. Now, of course, remember we said that when it is making a buy pullback, it should not break the golden ratio. I'm just going to mark the whole of this level here. We should not break this golden ratio, okay? If it breaks the golden ratio, it means that we are changing direction from going upwards to going downwards. So we already have this impulse, okay? So this is the highest point that the price came down from. I'm just going to change the colors. I like using red in the monthly time frame. Allow me to just change the color here. So now let's go down to weekly. Now we're just going to work exactly with these levels that we have marked in the monthly time frame. Now, if you to observe, this is what we have in the monthly time frame that we are just going to work with. This is the highest point we marked in monthly. Then in weekly, what we observe in weekly, we also see that we have a bend here. The market pushed higher and gave us a bend. Okay. Now, whenever you see a bend in our topic of support and resistance, what do? You mark, because those bends or what we call turning points are very, very important. And as you can see, price is already reacting on it. Now, remember, we have said that we had an impulse in monthly, okay? Then we expect a pullback. But it did not show us exactly the level that we could stop in unless it is coming to the Fib levels, okay? Because it was just an impulse. We didn't have any bends in monthly, right? Now, when you come down to weekly, you can now start seeing that we have this point here, okay? So if you had entered from this high here, okay, then you could be having an exit point here. So when it breaks here, it comes down into this last level of ours before we can continue higher. Are you getting how now we're putting the structures into place? Okay. I'm just trying to simplify it because some people are still struggling with the top-down analysis, yet we have looked at it a couple of times. Okay. So this is weekly. I'm just going to change the color to blue. I like using different colors. So this box still remains because it has our Fib areas. Okay. So if the market breaks below here, then you know that we are targeting this area here. Okay. Now, where they have from here, we already approach this level. So when we break here, when the week starts and we break below here, we shall be targeting this level here. Now, let's go down to the second structure time frame, which is daily. Now, whenever you draw these levels here, you have to adjust them, okay? You have to adjust them. For example, what do I mean by adjusting? For example, when you come to daily, what do we observe? We observe we have more turning points. For example, here, the market gave us this turning point, okay? We have this turning point, which we're going to change the color to the daily color. Make sure you have different colors that will help you. We have this, and then also that the market broke below. Now we have to retest this point, okay? Then also what we observe that the market gave us this level here, okay? We're adjusting it to daily. So we had a breakdown, then we broke back up, making this like a false breakout. So there's a possibility we could be retesting here to go back and retest here, okay? It will all depend on how the day how the week opens, okay? But currently, we're at a support level. Now, when we're at support, what are we looking for? We're looking for buys. Remember, we have a level that is not tested here, okay? Recall we said that from monthly, we're supposed to push down. This level could hold it. Why this level? Because it was a support level in weekly. But if we break it down, we come to this level. These are the levels that we have to retest before we continue higher. Remember, it is impulse, correction, then impulse. So this is a correction phase that we are in. So if you don't trade retracements, wait for the market to tap either this fib level or wait for the market to change trend. Right now it's making lower high. You can see it's a lower high. It's lower than this high. Lower low. It's now making another lower high. Wait for it to stop making these lower lows and lower highs, to start making higher highs and higher lows. Then you can continue the uptrend. Sometimes it may not necessarily touch exactly the last level you want, but it may just react to these current levels and then it changes trend. Okay. So wait for it to change. When the moment changes structure and changes trend from this retesting level. Remember, this is a retesting move. It's making lower and lower highs. The moment it changes to starting making higher highs, then you can target the top of this or untested levels. That's how you set your targets. Untested levels and that. Now, since we're in daily, remember, an intraday can utilize this to this, okay? This is an uptrend, okay? From here, you're looking for buys from support to this. For those who trade continuations, we only trade in the direction of that. Those who trade pullbacks, now they'll be looking for sales. This is what I explained. So if you trade continuations, since the direction is buy, we're just making a pullback, you're only looking for buys. You can buy from here to here. If you're trading the continuation up to down, when it reaches here and it gives us a sell direction, then you can do that. Okay, you can look for sales. Now, let's just mark our parameters, and then we can utilize. Now, again, we have to adjust this slab because it is too big. So I'm just going to adjust this. So from here to here, we have this slab. Okay. Then also here we have another level that is not tested, still in the same level that we marked in the monthly. Remember, red we marked in monthly. So I'm just going to remove this big box so that we have a clear chart. I like having clear charts. Okay. So this is how our chart looks like, and we are done. Okay. Now, our last level of pullback is supposed to happen when the market pulls back up to here, but it's not a guarantee that it will reach. Okay. Because also all these levels can influence our price movements. Okay. So this is a support. This is a support. Why is it support? Because it's a level below current price where I expect market to turn from. Okay. So currently we're making the pullback, but it should not break below our golden ratio. Okay. Our golden ratio is around this area here, this last level here. If you have to go back and we mark in the fib area that we marked in monthly, let's just go back to monthly and put our golden ratio as a line. So we drew our fib level from down here up to up here. Okay. Our golden ratio is just here. Price can do whatever it wants, but should not break below that level. Why? And if you have to come back to daily, you observe this is the last time that the price tested. This is our last valid higher low, okay? Here. And for us to change a trend, you know that we have to break higher low, okay? Now, this is the last valid higher low. The rest, you can see this one was not tested, this one was not tested, this one was not tested. It's just being tested right now. So for us to become bearish, like long term, the goal has to break this. And you can see it's aligning perfectly. So now, from here, intraday, you can see we're in daily. You can look for, if it gives us a change of trend, you can look for trade from here to that untested level. If it breaks below, then on the retest, you can look for, if you trade retests, you can trade the sell from here up to here. This is how we utilize these levels, okay? So we would have our levels. Now let's check what our entry time frames is showing. Now remember, I'm again reminding you, please, the time frame depends on the type of trader you are. Okay, so we have our levels here nicely. I know you guys are going to be saying there's a head and shoulder, this is a neckline. Yes, it's like that. And we say that only becomes head and shoulders when the neckline is broken, and you can clearly see the neckline was broken. Okay, so now we need it to be retested. Okay, so now remember this level here, we adjusted it to the daily time frame, and also the weekly person can use it because we do it in weekly, but also adjusted it to daily. So it's catering for daily and weekly traders. But this level, remember, is not tested. Now, when you come to H4, what do we clearly observe? We clearly observe that we do have a market that has created, it created this higher low, but now it has created a low. And now it's making like equal lows. Now, the moment it keeps doing this, okay, it means that it is creating a mini downtrend, okay? Remember, even if the market is moving like this, also there's a trend here, there's a trend here, there's a trend here. So now we want it to establish for us a mini trend here and changes trend. Remember, we change trend when we break a higher low or we break a lower high. So just make sure you establish your higher low and lower high here, then you can take the trade. Now, for this case, what do we have here? We do have this closure here. Let me just change the color here. We do have this closure here acting as our last level of resistance. Now, let's go to entry time frame of daily. Now, when you come to daily, you can clearly see that it's now even much more clearer, okay? We have a market that has created what? It has created this low, okay? We went up and tried to react here. We tried to break above, but broke back down, okay? So we are failing to take this level, but we have a resistance level here. The moment we close above this area properly, then we can be waiting for retest with the proper candle closure. We target this area intraday, okay? Now, if it keeps going lower, because it has already created a level of support here, you just keep shifting your level. You mark another level here, it retests, you mark until it breaks the last level to change for us trend. I've explained how the change of trend happens, then you can target this level, okay? Make sure you take a trade after a change of trend has happened. You can clearly see I've explained starting from direction, structure, until the entry part. How do we take entry? We take entry when the market shifts. Of course, we know that it has pushed higher, and now we are retesting. But in the process of retesting, you can see it's creating a trend. So wait for it to shift from this mini downtrend. It's a mini downtrend to start making an uptrend. Then you can target this area. If you don't wait for that, you're always going to be losing money, okay? So you can clearly see that we have done a top-down analysis using my time frames, okay? If you use them, you can also, if you use the same time frames, you can do that. But also you can use different time frames. It's not a must for you to use these ones, depending on the type of trader you are, okay? Now, let's take the second example, which is EURUSD. Now, those of you who are on our social media platforms, we talked about EURUSD. We talked about EURUSD, I think, last week. And from here, we expected the drop, but personally, I didn't see my rules of entry, so I did not take trades from there. I took a trade from here, okay? My rules of entry did not apply there. Now, let's do the top-down analysis again and see if you've really understood, okay? Now, let's start again from the monthly time frame. Now, when you start from monthly time frame, what we can observe when the market is pushing up, of course, we're going to be using the previous movement. So from here, we observe that we had the price that was coming to retest a level that it broke down and never tested. So this is monthly. I'm going to change it to red. And you can see we tested here. Price came back. It attempted to go through it, but failed. It was rejected again. Now, this was our last higher, lower high, sorry. Okay, this one here. So this is what we're going to be working with. Now, in between here, you can clearly see that we did have a high that price created here. Okay, we talked about it in the breakdown of last week. And then also you can put the closure of price if you want. You can mark it there. Okay. Now let's adjust these various levels into the smaller time frames, weekly and daily, until we go to our entry time frame. Okay. Now, when you come down the weekly time frame, okay, let me just go back to monthly and adjust properly. I had not marked this level well. It's supposed to be like this. Okay. So let's go down to weekly. Let's adjust these very levels. Remember, you're supposed to adjust the very levels because monthly gives us the direction. So when I adjust this, you can clearly see that we do have this the level that I'm talking about, this one here, that price failed to take out. Okay. Also, this one, we can just adjust it. It's this one that we drew in monthly. Now, let's come back down here and we get the details straight. Now, recall I said that when the market is pushing high, low, high, even here it's making higher highs and higher lows. Even here it's making higher highs and higher lows. Even here it's making higher highs and higher lows, okay? The bigger the time frame, it will, if it's bigger time frame, it will appear like it's one, like this, okay? But the more you go to lower time frames, you'll see more details. Now, like here in the monthly, you saw few candles, but now you can see a whole trend. Now, if you're not able to see the trend, okay, just go into detail a bit and observe, okay? Now, when you extend the candles like this, what do we observe? We observe the market created for us a high, higher low, higher high, higher low, higher high, higher low, okay? Then equal highs. Then we started coming down. We had an impulsive move down we traded last week, okay? So now, if you want, just for learning purposes, you can mark, for example, we did have this closure of price like this. So when I go back to candlestick, we did have this closure of price like this, okay? So this is weekly. I can change it to blue just for learning purposes. We had that high, okay? We had this high level. Then also we had the price creating this high level here, okay? Let's change it to the weekly color, like this, okay? So what do we see? We do see that the market created for us a high, higher low, high, higher low, higher high, then it came and tested this level. Now, the moment the price breaks below here, it means that now we are bearish. Now, what did we see the price doing? The price broke again more than one turning point, just like we explained in the gold breakdown. The moment price is breaking more impulsively, more than one turning point, it means that we are going to apply a fib, which we exactly did in our breakdown last week, those of you who watched in our social media handles. So we can see that where does our impulse start from? Just for learning purposes, our impulse starts from up here. Sorry, just go and delete that. Our impulse starts from up here, okay? From up here up to down here, okay? Now, remember we said that we do not have to break the golden ratio. So all this area here is the price that is where we want the price to come and test, okay? Let me just make our chart clear. Now, recall we said that the market broke this turning point, So I'm just going to make our chart clean by removing all this. And you can clearly see that price did what? Price came exactly and tapped into our fib level. So I'm just going to also delete this to make our chart clean. And also, I'm just going to leave this because this one has not been properly tested, okay? So you can see price made impulse, came and retested into our fib level and then pushed down. Now, this is the move that we wanted to go down with, okay? And price closed below this level here, okay? So there are two ways that we can approach EURUSD this week. We want it to come and give us a retest into this area here, or give us a deeper retest inside before we can go lower, depending on how it retests. Remember, a break and retest, the break must be strong, a retest should be very weak. For example, this is a strong momentum. Now I want to see a very weak momentum retest, then we can decide whether we're going more lower, or we shall wait for it to break above here on a retest, then we look for a buy, okay? Now, we're going to see that in detail when we go to the next lower time frame. Now, when you come down to daily, clearly see this was the fib area that we had. Now, in daily, always you're going to add, you're going to still reduce the boxes, just like we did in gold. Now, you can see this level here was tested, okay? Just change it there. Okay, it's all in this box. Now, we have another area that is acting into this box, above, slightly above, that price did not test. It attempted to test, but did not, okay? Now, also we had this area here that gave us a retest. So I'm just going to remove the blue box so that you can see everything clearly, okay? This here was not tested, but you can see the market created a low, lower high, lower low, lower high, lower low. Now, this was not tested. This was tested. This was not tested, okay? That's why you see when the price came back here, it quickly reacted aggressively. And all these areas are into our Fibonacci retracement area. It was our area of interest. Now, the moment price touches our area of interest, what are we looking for? We're looking for change of trend. So how does the market approach this area? You can see it created a W, higher high, higher low, higher high, higher low, higher high, then it changed trend. But you can see why I didn't take a trade from it. It was so aggressive, okay? It was so aggressive that didn't allow me to take a trade from it, but gave me a chance to take a trade from here. Now, let's mark these levels again. Now, I'm just going to, this areas here, this one here was tested, so I'm just going to remove it since it was already tested, meaning that if price had broken here, I would be targeting this level here. Any level that is tested it's significant, but it has a less threat, okay? Now, let's go down slightly to the entry time frame and you see exactly how the price approached here, okay? So when you come to, actually, let me go to daily and add in some levels here, just for learning purposes. So we did have this area here that price broke, okay? This area. Okay, see that? Price came, broke above, then also created this high here that was giving us that test. And you go back to candlesticks, this high, okay? Now, when you go to H4, you clearly see that this was the last level that we're supposed, the market broke above, came and retested, created this high here, reacted and broke above. So it was supposed to retest here, make a lower high before breaking, but you can see it just broke aggressively. So unless you just take trades without change of trend, then you could have called this. But personally, I did not get this trade, but instead I got a trade around here. Now, how did I get that trade? I got that trade in this way because, let me just show you here. I got that trade in this way. Now, price came down aggressively, but remember it created for us levels here that it had tested. Now it came and broke, meaning that this is our last higher low level. So when price aggressively broke, it came and retested. Alternatively, this is an impulsive move in H4. If you want, you can draw a fib level from here. It came and tested, then it pushed lower, okay? Now, since this was an intraday trade, okay, you can use H1 to take your trade. Now, there's a confirmation here that you could have utilized to take the trade. And also alternatively, we have a market that created a high, higher low, high, higher low. So the moment the market creates this lower highs, you can see this a high, lower high with this confirmation here, okay? Then you can take your sell either from here or from here, okay? So this is how we do top-down analysis from the direction time frame, structure time frame, you go down while zeroing the levels and determine where you're taking the trades from and where you're going to exit from. Now, just to hint on where do you exit from, I've already spoken about tested levels and untested levels. Untested levels are where I want to take our trades mostly from, and also where I want to exit from, because these levels are going to react with a lot of strength because previously they have not been tested. But also alternatively, if every level has been tested, always mark the high and low. For example, in gold, we marked the high. Now here, we're supposed to mark the bottom like this. That's why you see, if you saw from the when I was starting to analyze this, our target was the bottom of this move, because this is where the move started from. So if the market changes trend, it's going to trace untested levels or where exactly the move started from. And in this case, it was the start of the move. Okay. So that's how you set targets and how you do top-down analysis. Now, also brief hint on how do you set your stop loss. You set your stop loss on possible levels where the market could go and retest. For example, if the market has broken below here, identify, and you're going to take a trade below this area here. Identify levels that possibly the market would go and retest. For example, this neckline of this M here was tested, but this level here was not tested. So if I enter a trade from here, my stop loss should be slightly above this level, because market can easily go and retest this level. And if my stop loss is just above where I entered from, it will kick me out and then it drops. That's when you face issues of like you're in a trade, kicks you out, then it moves in your direction because your stop loss was too tight or you didn't know exactly where to place it. Okay. So now these are the two examples I need to show you how to do the top-down analysis. I hope it made sense and I didn't confuse you anymore. Now, let me just remove this. Now let's go, and you can pause this video now. I've done two examples. Now I want you to analyze USD JPY. Okay. USD JPY. Now this is USD JPY. Let me just remove it. Now you can, before you watch USD JPY, just do it on your own and see if you've understood. Okay. Pause it, then you come back and see what I've done here. Now, let's start from the monthly time frame as usual. Now, from the monthly time frame, what do we see? In the monthly time frame, we clearly observe that we had this level here. Let me just change it to red. Okay. Market broke above, tested two times here and here. So meaning we're going to identify this test here. You can see it gave us a test. Then also we're going to identify this high level also, because it gave us a test. Why am I marking this level and this one? Because this level gave me a test to this level. This level also gave me a test to this level. Okay. Now, in the process of the price coming to test here, you can see it reacted here and then broke above, meaning this is a significant level. So meaning any level that tests this area here is significant. Okay. So since this is significant, we are going to also to work with this. So this one was already tested. I'm going to delete it to make our chart clean. Okay. So we are going to be left with exactly this. We're going to be left with exactly that. So which level gave us a retest here? We have this level here. We are going to be working with this. So we have this, which was tested, okay? But when the market gave us this retest here, it went above, broke down, broke back above, meaning we have a false breakout here. So meaning price had to come and test this level here. So again, I'm just going to make my chart clean. You can leave it there if you want, but I like making the chart clean and only remain with the things that I'm going to use, okay? So I'm just going to put this neckline. I'm going to make it red. Okay. So now let's go down the weekly time frame. Now, when you come to the weekly time frame, make sure you adjust your slabs. So this one, I'm just going to adjust it like this. Okay. This one, no need to adjust. It's just the same. But if sometimes it's so big, you can just have two lines. You say if the slab is so big, you can just have two lines. You can have a line here to show that this is an area and the line up here. When it's too big, you can actually trade from this support to this resistance. Okay. Why is it like that? Because when it is so big in a rectangular form, you miss out on trades, and because it is covering trades in the next lower time frame. So I'm just going to adjust this to this neckline area here like this. Okay, like this. So now what do we observe? We do observe, you can see we have a hidden structure here reacting to this level here. That's what I was talking about. So someone could have taken a trade from here to this resistance. Now you can see that price broke above, now it's reacting to this resistance, and we need to push higher. Now in weekly, what do we observe? In weekly, we do observe that price actually broke above this area here, okay? Meaning that it came down, it created a low, lower high, low, lower high, low, lower high, then it broke above. So when it breaks above here, it means that we are pushing higher. But now what do we observe? We observe that price has broken this standing point, this standing point, and this standing point, okay? So in simple terms, what are we going to apply? Fibonacci retracement rule. Because the market has not retested this, it's just retesting this. So you can bring in a fib level from down here up to where the move stopped there. Okay, so in this case, where is our Fibonacci retracement starting from? It's starting from here and should not break this area here. So I'm just going to remove this because in the same area, I'm going to remove this box here. Okay, so if you're trading USDJPY, there are two alternatives. We can look for trades from here because remember, with this red color here is a monthly level, very strong level. You can see it's tapping into this monthly level. So there's a possibility it will be very hard for you to break. But in case if it pushes lower, if it's not changing structure and trend and keeps pushing lower, because it can happen, then it should not break this box. Then you look for buys to target this next level of resistance. Now, also remember we said you mark exactly the highest point, but here we have this false breakout also. I can mark it there. Since it is big, I'll mark using two lines like that. If you want, you can use a slab like this, like this. The choice is up to you, but I see it's big, so I will use like that. So I will just remove. Now let's go down to the daily time frame and we'll try to add in some factors. Now, when you come down the daily time frame, you clearly see that the market, in this very box, the market tested this area here. I'm just going to change it to the level. Tested that area, tested this level also, but improperly. So it's not properly tested. Now, which levels give us that retest? We have this level giving us that retest, this area, okay? So I'll mark it like this, okay? So if this box is so big for you, we shall be interested in the price coming back to test this level. Let me also delete this because it was tested. So we do have untested level, which is this one here, okay? Now, if price doesn't give us a change of trend here, it will be, to take a buy up to that red level, it will have to stretch up to lower here to kick out people, then it pushes higher. Now, before we go to the entry time frame, remember I said that you must see change of trend in the entry time frame. What have we observed? Excuse me. What have we observed? We have observed that we have a support here, okay, which was a resistance before. When we broke down, it became resistance. But when we broke above, it became support level, okay? Now, since this support and of a strong time frame, okay, we shall be looking for change of trend from this support level. If the change of trend doesn't happen here, it doesn't mean that the setup is wrong. Wait for it to stretch a little bit lower to the untested level, because this level, when we broke above, we never tested it. Then you can look for the change of trend to push higher. Now let's check if change of trend is happening here or not, okay, in the entry time frame. Now let's go to the H4. I like using H4. Remember I said it is up to me. It's not a must that also you should use H4. Now, when I come to H4, what do I observe? Clearly, I observe that when the market was approaching down here, let me just show you, okay? We had this triple top actually. Let me just reduce this. We had this triple top. First, the market gave us double bottoms, then again came back and tapped into that same zone, okay? Now, meaning that the neckline of these areas is going to be a low, okay? So, which is the level that gave us that last standing touch there? It was this level here, okay? Let me just adjust it well here. It was this area, okay? You can see that the price came lower low, lower high, tested it. So this was a very crucial. And of course, there are some gaps here, but we're just going to leave them. Then it gave us this bottom here. So we have a low, lower high, low, lower high, equal lows, equal highs, equal lows, like that. And then lower low, lower high, then it created again another bottom here. So if you want, you can mark it just for learning purposes, okay? So when I mark it like this, what do I observe? I observe that now, for me to take a buy, the market has to break above this level here. Now, where did the market break above? It broke above using this candle, okay? And this is an aggressive candle. So when the market broke above, it lost momentum while going upwards. Why? Because we need to make a pullback. Now, there are so many strategies here that you could use, but I'm not going to talk about them. I trade pure structure. So by structure, I have a market that broke above this area and never tested it. But if you want, you can talk about order blocks, you can talk about fair value gaps and the rest, okay? There's also a W here, the neckline was not tested and the rest. So the market pushed higher. Now it's coming back to retest here. But how is it coming back also matters. So it has already tapped back into the area we're supposed to be looking for a confirmation. So you can just wait for a candlestick confirmation. That is one way. Then secondly, still you can do the same thing. This is the last resistance that we have, okay? So the market has tapped into this zone and has created a lower low, lower high, lower low, lower high, okay? So if the market reacts and then closes above, then we can be taking our trade to that level up there. If it does not happen and keeps going lower, the lower that I talked about, until it changes trend, there is no trade. That's how you take trades. Yeah, I know the waiting part is very hard for most traders, especially if you're starting, but that's what is going to make you consistent. Never take trades if there's no change of trend, no matter the strategy you're using, okay? So that is it. I hope you passed it according to the practice that you made, because this was supposed to be a practice one. And I wish you guys a profitable week ahead. We shall be making more and more practice. And also, you can keep checking up our website. We're going to make learning lessons free of charge. Don't worry, there's no need to pay. All these things that you see that you need to learn, you'll be able to trade are free. Okay, so you can keep checking our website. I'm going to leave the link in the description. Check our website. It's not yet active, but the moment it becomes active, we're going to be having lessons from when you know nothing to until when you're a pro. Okay, with enough practice sessions showing exactly how we take trades and all that. There'll be very many videos, but they'll be very helpful. On YouTube, we post randomly, we do breakdowns, we are correcting mistakes here and there, but they're not in order. So if you want to learn in order, depending on the category you're in, whether you're a beginner or intermediate or an advanced trader, but you're struggling with consistency, we shall have all that in order, okay? So keep checking out the website, and hope it will be of help. Have a good time.